Hi guys, my name is Gerald from Trading Waves and welcome to today's short video. In today's video, we're going to be taking a look at one of the instruments which we look at pound chief, the Great British Pound against the Swiss franc as the instrument for today's short video. Right, so on the basis of the Elliott wave sequence, one can see that by just looking at the largest degree, we can see on the screen the red Y and the red X. One can see that we are within a corrective structure. Okay, if we had something like a 2 here or a 1 here in red, a 2 there in red, we know we'd be in an impulsive sequence. But because of the WXYs, we are in a corrective structure. Right, so from this peak here, and by the way, if we have an X after a Y, it means we're expecting 11 swings, W, X, Y, X, Z. Okay, so we have completed the first 7 swings, 1, 2, 3, or a double correction. We have completed an X. We are now within the last corrective structure. So WXYXZ is a combination of 3 corrective structures. It's a W, a Y, and a Z, and they are connected by X's. Okay, so we have this connector, and we are within the last corrective structure, Z in the red degree. The question is, could the Z be done here? Could we have our Z in red there? Or could it be that we have our W in green, X in green, and we are going for Z lower? So 2 scenarios. Z could be done here, or Z still has to complete somewhere lower. Okay, now we will know this if price from current level breaks below this low here. If it goes lower than this low, we would know that Z is still to form lower. But if price for some reason turns higher before breaking this low and break that peak, then we know Z is done here. Okay, and then this will be the beginning of a sequence higher, right? So here, if Z is going to complete lower, what we want to see is a corrective structure like this, which is a counter trend bounce for more downside, that which would be indicating, in other words, the structure would be indicating a continuation pattern to the downside. We don't expect that the market is just going to go lower in a straight line, or is just going to go turn and go high in a straight line. It has to give us corrective structures. For example, from this low, it went up, corrected, went up, corrected, and went up again. See? Now, what we would expect is the same thing, that from here, if it's going to go lower, it could be going down like this is an impulse, corrects, low, maybe another correction, low, maybe another correction, again low, but it goes in an impulse, then it breathes, an impulse, then it breathes, an impulse, and so on and so forth. That's what we'd expect to see until it breaks below this low here to confirm that lower, or remains above this low here, turns higher, breaks this peak here to confirm that Z is completed there. So one of these 2 scenarios is going to happen, and one of them is actually, or one of them actually has a higher probability of happening than the other on the basis of correlation. I'm giving out the secret now on this pair. On the basis of correlation, one of these scenarios has a higher probability of happening than the other. Now, to know as to which pair or which instrument would be correlated to pound chief in confirming the possible or the view that has a higher probability, I invite you to take advantage of our special here. As you can see on the screen, for 30% off on full course, advanced one-on-one and lifetime plan. Become part of the family. You'll get to know how correlation is used. In addition to that, there's a lot more. RSI, and other indicators, a proprietary indicator that which you use in-house. You'll get to know how we use those. All right. That's all for today's short video, and I hope you guys benefit from watching this short video. Cheers.